Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah, and it promises to be a day which will start off in the green, led primarily by what's happened to the world markets. Now, the jobs report that came out beat expectations, 4.8 million jobs created versus expectations of 2.9 million jobs. All of that led to the US markets doing better. I mean, I think a lot of people are saying that there's a strong handover. I don't think it's strong handover. It's like and 0.5% kind of a gains for the Dow and the S&P. The Nasdaq has slightly more than that, but yes, it's positive for sure, and that should augur well for the cues that come in for our markets. That essentially, so good start for the U.S. markets, and I think Asia is taking off from there as well because the Asian screen is awash with green. There is fair degree of green across the screen. The early markets it started off the likes of Australia and the others, or even the other ones, the KOSPI, HSI, etc are all doing reasonably okay for themselves. So you have to say that the start is positive for the Asian screen. I must add here, though, that the economic data is not necessarily all the best. So yes, if you look at the China services data, that has come out okay. There's this very nice index that Citigroup has, which is the City Surprise Index that they come out with. And if you look at that particular indicator and look at this, it shows you that the Asia Economic Surprise Index is back below zero. Now, essentially, this index, if it is in the positive, it indicates positive surprise on the economic data. If it's negative, then it indicates negative surprise on the economic data. So the markets may be liking the Chinese services data, and therefore that's an added incentive. But a lot of economic data is actually not turning out to be all that positive. In fact, it's giving negative surprises. So you never know. But as I said, the start promises to be okay. The SGX Nifty indicates a start which is in the green as well. So you have some bit of positivity to our markets in the session today for sure, at least at the start. What happens during the course of the day is anybody's guess, but we have some positivity, about 40, 42 odd points, 0.4% that we'll start off with. Now, the trade setup, it's simple, right? I mean, the global market rally is likely to rub off on our markets as well. In my mind, I think the base of the market is now shifted slightly higher. So if earlier everybody was talking from a trade perspective from 10,000, 10,100 being that base to which the market could correct and then go up, I think that conversation is probably shifted to about 10,300 now from a trader's perspective. Can it break that? Sure, it can. But I think over the last few days, all of us have seen that if you try and take really large negative bets on the markets, even during the US-India-China standoff, I think it's not paid any dividends. The markets have this very brisk momentum to themselves on the upside and maybe make the trend your friend. So I'm not one to predict what the indices will do, but the trend certainly looks positive for the time being. By the way, remember, the rupees ended positively as well. In trade yesterday, a very sharp up move for the currency vis-a-vis the dollar. 75.03 is where it ended versus 75.60. So really remarkable pullback for the currency in the session yesterday. However, the stocks that one should keep an eye out for on this positive trending day, there are a bunch of news flow. There is a bunch of news flow, and the stocks will react. To my mind, the stock of the day is Motherson Sumi, and it may not necessarily show the stock of the day kind of a reaction, but it's important to analyze what this means in the medium to the long term. And there are a few pieces that are clear, a few pieces which are not. So, firstly, the news. They approved the demerger of the domestic wiring harness business of the company into a resulting company, which will be a wholly owned arm, and shareholders will get one share of the resultant company for each share held. The board has also approved the amalgamation of Samvardhana Motherson International with the company. And that's the parent company which holds the stake in Motherson Sumi, which has got a few allied businesses. And therefore, now all major businesses come under one roof, which is a good thing. Now, they have, of course, said that there is no change in the shareholding pattern as a result of the merger pursuant to the scheme, and the transaction is likely to be completed by Q2 FY22. What I like, though, is what brokerages have said. For example, I do think there is a higher than expected dilution, by the way, for the minority shareholders, and that might be a bit of a negative. I think Motilal Oswal sums it up well. As things stand right now, their assessment is very interesting. They're saying that considering the limited understanding, as details of this demerger are limited, of the core business of the parent company, which is Samil, implied valuations seem to fully capture the medium-term growth potential of its key businesses. And their final take is that we believe that this will drive better value discovery of the non-India wiring harness business and give the minority shareholder the option of investing in either or both of the businesses. So this is what uh, Motilal Oswal is saying. Look at that. That's the point that I was trying to make. That they're saying that we believe that this will drive a better value discovery and give minority shareholder the option of investing in either or both of the businesses. So net, it seems positive. Um, is there a risk of the investor believing that there is a higher than expected minority shareholder dilution? Sure, there is, but maybe, just maybe, there could be some positivity to this stock today. Difficult to say that, but it remains in the terms of news flow a key stock to monitor. Aside of that, there are nifty changes that have been announced yesterday. One stock goes out, one stock comes in. So Vedanta moves out, and HDFC Life comes in. This is effective July 31st. But the first of the insurance companies makes its way to the Nifty, and that's actually pretty interesting. It might be a very small weightage, by the way, but passive flows could be interesting to monitor. Usually, the market tries to preempt that before. So the last week of July would be interesting for HDFC Life, if at all, really. PI Industries has launched a QIP issue on Thursday at a floor price of 1534 rupees per share. I think it's a discount of 2% odd to the existing price, closing price on Thursday. The indicative deal size is up to about 2,000 crores. So do watch out for PI Industries as well. A successful completion of the QIP might actually aid the momentum on the stock. Let's wait and watch how this one reacts. And JB Chemicals, KKR is going to acquire a controlling stake for 745 rupees a share. That's a 4% upside. I must say, I thought people were happy with the existing promoter shareholders. Most brokerages or farm analysts that I spoke to said that they're doing a reasonably good job. So whether this is a net positive or a negative, I don't know. It's just a 4% upside. But if you believe that a private equity company can run a pharma company better, then sure, stay invested. Otherwise, you may want to get out of this stock as well if you're indeed holding it. Whether you want to buy it fresh for a trade, I don't think so. Keep in mind, companies like SAIL, which has achieved the highest monthly turnover, or defense stocks because the government is now sprucing up the LSE, would all be in focus. So private tenders are invited from companies like HAL, etc. So watch out for those as well. Last but not the least, what stood out for me, and I think there's a lot of debate about whether the testing in the US is more and the death cases are lower, etc. But I must say, just look at this. What's happening in the US now as economies are opening up and young people are moving out. Arizona, half of all the positive cases are between ages of 20 to 44. Florida, the median age of the cases is down to 37 from 65 in the month of March. Texas, Hayes County, people in the 20s make up 50% of the victims. Young people are contracting coronavirus as they step out. All of us, young or old, better be careful as we step out, as India opens up slowly over the course of the next couple of months. We need to be really, really careful for our health and for the health of our elders. Thanks so much for tuning into the Trade Sir.